Welcome, folks. This is Tom O'Brien of TFNN. We're broadcasting live today from beautiful Manhattan at the Hard Asset Show. Our guest today is Steve Stakiiw. He's the manager of corporate communications at Trevali. Trevali trades on Toronto under the symbol TV. Steve, welcome to TFNN.
Thank you very much, Tom.
You know, tell me about Trevali, because we do a lot of interviews here with gold companies, silver companies. You know, we're talking silver, lead, zinc, copper. Pretty cool.
It's a different combination. It's a polymetallic, as they call it. Obviously, there's a few different metals there. Trevali's a fairly new company. We just listed on the Toronto Stock Exchange last October.
Okay.
But we're certainly not losing any ground on our production aspirations. We've got 2 mines coming on stream in the next several months. The first one we have is called Half Mile, and that's in New Brunswick in Eastern Canada.
Okay.
That'll be in production in September. Our second mine is Santander, and that's in Peru. It's in the central Peruvian polymetallic belt, and that will be in production by Q1 of next year.
When you mine, explain to me how it works with lead, zinc, and copper. Is it the same way? I mean, you're getting the rock out, right? And then, how do you basically mill the rock?
Basically, they're both, the deposits we're working on are called massive sulfides.
Okay.
So you're mining the rock that has a lot of metal sulfides in it, and the silver is in with that as well. Typically, you mine out what you call your ore or your resource. You mill that rock, so you crush it so it's very fine, and then you use a variety of mechanisms to separate it out. Typically, with sulfides, you use what's called flotation.
Okay.
So you're able to float out metals of different densities, and it allows you to produce essentially a zinc concentrate, a lead concentrate, and a copper concentrate. So you can produce 3 different concentrates. And typically, your silver will usually almost always report with your lead.
And so what ends up happening, of course, is that when you look at that table, they float at different weights.
They do. They have different specific gravities, and what they use is different reagents and chemicals in that process to float them out specifically.
Okay. Now talk to me about Peru.
Well, Peru is where we started the company back in '07. We acquired a past-producing mine called Santander. It had operated from 1958 to 1992.
Yes.
It went into basically the Peruvian equivalent of Chapter 11 at that point. There were low commodity prices and hyperinflation in Peru at that time, and it sat dormant since then. We acquired it in '07. And what we liked when we showed up on the ground, in addition to all of the infrastructure, a 1,500-man camp that comes with its own hydroelectric generating station, mill facilities, all of that, is that we walked the property and we saw outcropping economic mineralization that had never been drilled. So we knew that there was significant upside in terms of exploration on the Santander project. And subsequent to that, we've drilled probably in the neighborhood of about 150 drill holes, and we've got 5 new deposits that we've discovered on that. And we've got 3 of those are modeled in our mine plan. So we've got the Magistral North, Central, and South deposits, and that forms the basis for our mine that'll be going into production towards the end of this year.
When we look at, I know what the price of copper is, which is definitely high. Silver is definitely high. What's lead and zinc like?
Both lead and zinc, they're both currently trading around $1 per pound level.
Okay.
And they're in the mid-range of sort of say their past over the past several year pricing. Why we like it is the forward-looking curve or the forecast for lead and zinc are very strong. And that's being driven primarily because there's a lot of major world-class or marquee zinc lead mines that are going offline. They're exhausted,
Yes.
and there's no new big mines coming up behind that. So there's forecast deficits going forward over the next, say, 3 to 7 years. And we think we're obviously positioned at the right time in the market, having 2 mines coming on stream going into that.
And in a commodity business, the positioning is so crucial.
Absolutely,
isn't it?
yeah, no. Well, I think we are well positioned. They will be low-cost mines. The one in Peru, we expect to be producing at a fairly lower quartile in terms of operating costs going forward. And the basis for that is we have a lot of byproduct credits. Obviously, there's significant silver within that as well. So that certainly helps pay some of the freight when you're processing the rock.
And in Peru, is it an area that you're going to be able to get all the concentrates out also?
Absolutely. It was a past-producing mine, so it's on. There's 3 different national highways that go within short proximity of the mine gate. They did ship ore previously, or ship concentrates to the port in Lima. It's only about a 5-hour drive from Lima, so it's very, very readily accessible.
That's lovely. Yeah. Well, listen, we really appreciate the update. I look forward to having coming back again. Folks, the name of the equity is Trevali. It trades on Toronto under the symbol TV. Steve, thank you so much. Have a great one. Have a safe one.
Thank you so much, Tom. It's a pleasure.
Absolutely.